Hey traders, in today's lesson I'm going to show you some technical analysis tips and tricks on how to use moving averages. Now this can potentially help us pick some nice winners and avoid some losers, so stay tuned. Hey traders, Cawiezell here with thetradersplan.com, here with a brand new video on how to use moving averages. I want to welcome you to another lesson and I appreciate you stopping by. I'm very glad to have you. If you're new to my channel or new to any of my lessons, I want to welcome you as well and encourage you to subscribe to my channel as I have plenty of other lessons on chart reading. So if you're interested in trading the markets, go ahead and hit that subscribe button as well as the notification bell so you can stay up to date on all my recent trading videos. Now let's get right into it. I'm looking at a chart of AMR, and it really doesn't matter the ticker. This is just for educational purposes only, not a buy or sell recommendation. So these are the moving averages that I have on my charts. I have the 20 EMA, right, exponential moving average, the 50 and the 200, and both of those are simple moving averages. Now really quick, let's talk about what a moving average is. It's just a simple trend following tool, and all it is we're looking at the blue line, the 50-day simple moving average right here. This is a daily chart. All this is, if this is the 50, this is the average of the previous 50 closing days. Okay, the previous 50 closing periods, that's all it is, and it plots, right, when it's going up. That's a nice tool to show us that it's trending in the right direction, and when it's going down, right, it's going through a consolidation or, you know, something much deeper. So I use for the 20, I use any periods that are 20 or less, I use EMA, and any periods that are 50 or more, I use SMA. Now, why do I do that? That's just something that I've always done, right? The exponential moving average is going to move a little bit quicker, and it's going to give you a bigger weighting towards the recent price action versus the simple the SMA is a little bit slower. It's just going to take the average of the 50 periods. So in shorter time frames and shorter swing trades, you might want to use the EMA, but there is no perfect answer. And that also, you know, brings me to the statement that there is no perfect tool. There's no perfect indicator out there that works every time. This is a trend following tool right here. So when there's not a trend, or when a stock or the market is consolidating, it's not going to work very well. But considering I'm a trend follower, I like trending stocks or trending markets, right? I am going to really focus on these when stocks and the markets start to break out. I like this for several reasons. It's simple. The average person can use it. It's not complicated, right? It's just a nice trend following tool on the chart to show me where the trend is going. I also use them as stop losses as well, as a nice trailing stop, especially the 50-day moving average. Right? If the stock finally closes below the 50-day moving average, that's usually when I exit the trade. Now the question is, you know, do you use, you know, take signals or maybe use a trailing stop on shorter periods or longer periods? That is completely up to you. I would say that if you're looking to trade a stock for maybe 2 to 3 weeks, you know, or less than a month, and you're looking for those most powerful trends, then the 20-day EMA is probably a good selection for you. If you're looking for a longer term move, like maybe 3 to 6 months, I would say the 50-day is probably an excellent choice. I am a fan of the 50-day SMA because I want to give my stocks room to breathe. I want to give them more room, more potential for the upside. To give them more room to breathe, you have to allow for those pullback scenarios. You can see right here that, you know, this stock, AMR, starts to break out. It's finding support nicely on the 20-day EMA, and then it pulls back deeper, but it finds support at the 50-day SMA, right? So I want to be in for this whole move if I can, and this was a pretty nice trend, right? They're not all textbook like this, but if you're looking for just a shorter move, get in and out, you probably would have been out right here. So it's nice to get in and out, but you're going to miss a bigger move if there is one. And because I like growth stocks, because I like trend following, and I've studied trends in the market indices for a very long time, I've noticed that in nice trending stocks, the 50-day SMA seems to work pretty well. Okay, so again, the shorter the time frame of your trading style, the shorter the period you want to go. if you're more intermediate like me, kind of like to go the 3 to 6 months range, you want to give your stocks room to breathe, I think the 50-day SMA is a great tool. So now let's look at this and let's analyze this. The number one question, and I got rid of the volume down here just to really clean this up for a second, okay? Just to clean it up just so you can focus on the moving averages. So one question, I like to ask myself two questions, right, when I'm analyzing a stock. Question number one, whatever period I'm using, let's just say the 50-day SMA, and I'll use that and I'll use these both. Is it curling up? Okay, that's the first question I'm asking myself because I want to know if that trend is up. You can see that there is a nice uptrend right here. It consolidates, the moving average flattens out, so you can kind of miss all, you get out right here, and then there's a nice cup with handle breakout right as the moving average starts to curl up, and then you can continue to ride this trend. So first question, is that moving average really curling up? The second question I'm going to ask myself is it a stock that respects moving averages? Now, because I'm a trend follower, I want a stock that respects moving averages. And why I like that is I think they are much more predictable. Now, we don't have, we don't have a predictable market. We don't know that. But if a stock respects moving averages and has a history of respecting moving averages, it's really easy to make that trade. Okay, so two questions. Is the moving average curling up? Check. Does the stock have a history of respecting moving averages? Check. Okay, and then you also want to consider, okay, what moving average is it respecting? I think this stock right here respects both. It respects the 20 and then it respects the 50, okay, on deeper pullbacks. And you can see right here that it broke out, it pulled back, found support right there, and then in the strongest rallies, it's going to be above the 20-day EMA. Now, I call this green line, the 20-day EMA, the rally line, because in very strong rallies, stocks and markets are going to trend above this line. If they do need a deeper pullback, like right here, in a good market, they're still going to find support. So this is just a great example. You buy a breakout down here, maybe you sell half at the 20, right? So you book partial profits right here, and maybe you sell half when it breaks the 50. Now, you can put a stop loss around 1 to 2% behind this line and always use hard stops. Even if you get picked off, that's okay, because there are going to be plenty of environments where you wish you would have gotten out when you were supposed to, and then the stock continues to crash, right? You can always buy it back, but if a stock crashes, it's harder, okay? So now the 200-day moving average, I don't really use it that much. It's more just there as a kind of just an extra piece of knowledge, just an extra indicator, really a very, very long-term support. But I find trending stocks are gonna really find support at the 20 and at the 50, okay? So when I have a strong trending stock and it breaks the 20, I'm gonna see if it respects the 50, and if it does, we're good. In addition, when it makes that first test, let me talk about the power of 3 for a second. I believe in the power of 3 when it comes to trending stocks. And what I mean by that is usually, the first and the second test are successful. And usually the third, sometimes it can continue to struggle because the stock is tired. And I think, right here, this trend right here is a great example. Actually, let's start with this one. You have, a breakout. You have 1 test, 2 tests, and then the trend is tired and it breaks, okay? So then it goes up again. You have 1 test, 2 tests. Even though it dips below it intraday, it still finds support. It comes right back, and then when it starts to break again. So you're going to find that a lot of times, if you're going to play the bounce, you want to buy the first or the second test. Usually third time is a failure. So right here, when it finally pulled back to the 50-day moving average, you have 1 test. You have 2 tests, and I don't know what's going to happen here, but I'm not buying a third test, right? Because now it's getting choppier towards the end of the trend. The first test is absolutely better. So let's look at something else. Let's look at another example. Here is a great example right here of a trending stock. Again, doesn't matter the ticker, right? I'm just looking for a stock. Is the moving average curling up? Is it respecting and has a history of respecting moving averages. And you can see right here, back here, this is an uptrending stock. It doesn't really respect the 20-day moving average, but it does 1, 2, 3 times respect the 50-day moving average. So I say, okay, this trend is not super strong, but it's still going up. It's still respecting that line. That's a great place to maybe buy more shares or start a new position. So then if it's respecting it, then all of a sudden it breaks. That means I'm getting out. Okay, I'm getting out probably at the end of this day right here. And then look, you have a super strong trend. This thing just goes straight up and then it comes straight down. But that first test, you would have bought that bounce, you would have made money, got out somewhere around here, or you could have a rule to sell it into strength. So this is another really good example of a stock that is respecting the rally line, which is the 20-day EMA. Let's look at UNG. Nat gas has gone crazy, unfortunately, as of lately, due to the Russian invasion. But you can see that it is really choppy right here. Doesn't really, you could say it respects the 50-day moving average down here, which, it breaks out, it pulls back, it finds support once, it finds support twice, and then it just, it goes absolutely off. So I would expect when this finally comes back to earth a third time, that's probably a bounce that I'm not buying, but it has found support the last 2 times. Extra bonus if it pulls back to a crossover. So right now you have the 50 crossing over to the 200, the red line. So you really got double support there. So it's not respecting the 20 initially, it's respecting the 50. So that's the line I want to play right there. Right there, I see that first successful test. I'm buying the second one. It's got double support down there. Now let's look at an example of how we could flip this upside down. So you have PayPal right here. It's not had a very good 12 months, but look at how many times we're going to follow the blue line, because that's the line it really seems to be rejecting. Look, it starts to break down, it comes up to the 50-day moving average, gets slammed. Rejection. Okay? Rejection. So in this really strong downtrend, just like in really strong rallies, it can find support more than 3 times. But, it's been rejected so many times, I would guess that on the next time it probably will be successful, because again, you have the power of 3. If something rejects 2 or 3 times, it's probably going to come right back and punch through finally. That doesn't mean it's going to the moon. The same thing is flipped. Same thing if it's flipped. If it's flipped, if it's strong, it finds support 2 or 3 times. I'm not buying the 3rd or the 4th bounce, because it probably needs a breather, right? That relief rally. Now, you can use this with the major market indices as well. Let's just look at QQQ, for example. QQQ, you can see it is really, rallying around this line. You can see it starts to break out, it finds support at the 20-50 crossover, right? Comes down and breaks real quick, but look how it's just riding that 20-day EMA. So the rally line is working pretty well. It finally consolidates deeper and it comes back and it hits that next line. So that's a great opportunity for enter, right? Maybe you sell in a strength, maybe you sell it as it breaks down right here. It's interesting in trending markets how strong these are. And let's look at something I like. This is not a nice and neat chart, by the way, but it's funny. Look at now on the flip side, now that the market is in a strong downtrend, look at how many times it rejects at the 20-day. Rejection. It pops up above once and it fails. Rejection. And then finally, after all these rejections, it breaks through and then rejects at the 200, comes down, tries to snap back, and then it gets rejected at the 50. Now we're in a downtrend again. So it takes a little bit getting used to. It takes a little bit of practice, but let's just kind of keep in mind, we want to find out which moving in a trending market or in a trending stock, which moving average is it respecting, and when we want to play the first or the second bounce. If it's not respecting any moving averages, to me, that's a little bit harder to trade. So I'm probably going to pass on that, because I use moving averages as a trailing stop. They make the decisions easy for me and their potential support. So if I have my stop loss under support, I can maximize profit. So I really hope this was helpful. If you have any questions, feel free to leave a comment below because I answer the questions on a daily basis. If there are additional videos you want me to create, you can drop that in the box below and check out those links. So if you're new to my channel, just a reminder, go ahead and hit that subscribe button as well as the notification bell so you stay up to date with all my recent trading videos. In addition, you can check out my website at thetradersplan.com. There's some great training on there. You can click the button below. So I hope this was helpful, and I'll see you on the next video.